Hello and welcome. This is Islam Ahmed. I will be your lecturer today. If you can see my screen, you should now see the risk warning. The risk warning states that trading in Forex, CFDs, and other derivatives is highly speculative and carries a high level of risk. It's possible to lose all your capital. These products may not be suitable for everyone. Today's topic will be about the continuation and reversal pattern. If you have any experience with trading, you would know about the continuation and reversal pattern. And today we will try to discuss these patterns and to learn how to identify and use it to our advantage. So before we dive into the world of continuation and reversal pattern, we need to get some important information and knowledge about this matter. So what is a chart pattern? A chart pattern is, or a price pattern is an identifiable movement in a price on a chart that use a series of curves and trend lines. So it's a pattern you can identify using the curves and trend lines and the actual move of the market. So these patterns may repeat and it occur naturally due to price action, and when they can be identified by market analysts and traders, they can provide an edge to trading strategies and help them to beat the market. And this is the ultimate goal of all this, is to beat the market, to know where the market is going. Okay, so there are 4 key elements that are needed to form the pattern. At any moment, if you can't hear my voice or see my screen, please send me in the chat. So we need 4 elements to shape the pattern. First, we need the old trend, the trend that is already has been established for some time, and from that a new trend will begin. And this is the second element we need. We need the new trend, which is a reversal of the old trend, and the price becomes when it exists out of a consolidation zone. So this consolidation zone is the zone which the price become constricted and there is support and resistance level that the price cannot exceed. This is this zone, and then he break out, the price break out to either one way, and this is the breakout point, which is the point at which the currency or metal or share breaks out of the consolidation zone. There are 2 types of patterns. There is a reversal pattern and continuation pattern. So when we see a pattern, there is 2 types of patterns. There is some pattern that give us a signal that the trend will continue after this consolidation period, and another indicator of continuation. So it's either continuation or reversal pattern. So let's start by a reversal pattern. What is a reversal pattern? It signal either the bulls or bears, so it can be both. Okay, so a reversal means there is a trend, so this trend might be an uptrend where the bulls are dominant in the market, or downtrend where the bears are dominant in the market. So either one of those, but there were some dominations, there were some strengths in the trend, and then there is some change in the trend imminent. The current trend will see a pause, and then the price will move in a new direction from the other side, bull or bear. So if it was like going up, it will start going down, and vice versa. So now let's see the most common reversal pattern. So we will start with the most common reversal pattern, which is the head and shoulders. Head and shoulders consist of 3 parts: a peak to the left, which we call a shoulder, and a higher peak, it's higher than the shoulder, which is called the head, and then another peak to the right, which is the other shoulder, and then the neckline, which is drawn to connect between the 2 bottoms of the shoulders and the head. So this line is very important because as it break, we get the signal. This is the signal we wait for to enter in the opposite direction. And there is inverse head and shoulders or head and shoulders bottom, which is the reversal chart pattern similar to the head and shoulders, but it's inverted. We see it in the downtrend. We will see this in the chart in a moment. So the pattern contains three lows, with the middle low, the head being deeper than the two outside lows, the shoulders, which are shallower. When this pattern is complete, it's usually a signal for a bullish trend reversal. So let's move on and see some examples. Here you can see this is the head and shoulders pattern. Here, this is an uptrend, okay? An uptrend, the price is moving up. And here there is a higher high, higher low. So until now we have an uptrend. We are now making a higher high, but we couldn't make a higher low. It's the same low as the shoulder, see? And then we move up, and this time we make a lower high. We couldn't break this high. We couldn't make a higher high. So now this is not an uptrend anymore. And actually we go down again. So now we have this neckline. You can see it. You can draw it yourself between the shoulders and the head. And then if this breaks after the right shoulder, if it's break, we predict that the market will go in the opposite direction, will go down, and we have a target. And this target will be the same measure as the measure between the neckline and the peak of the head. This would be our target for this shape or this pattern. And our stop loss, of course, will be, it can be above the shoulder or above the head. Of course, above the head will be safe, more safe, but of course it will be higher in value in pips and so on. So this is now the head and shoulders, the normal head and shoulders, as you can see in a chart. Okay, you see this is a candlestick chart, which is going up, down, up. Couldn't make a higher low. It's the low, it's the same as this previous low, and then we go up. We couldn't even make a higher high, and we come back, and this is the neckline. So when it's break, we sometime this is a pro tip. You can wait for the price to retest the neckline, because most of the time it will break and retest before it goes in the opposite direction. So you can wait, and this will give you better price to go inside. Let me use this laser pointer. So here you can see this candle actually made a retest. Here you can, of course, you can't get the perfect entry, but you should wait for the retest. Most of the time it will, and even if it didn't, it's fine. You can find another opportunity. Market always give you opportunities. This is another example of a chart which making, this is a shoulder, this is the head, this is the shoulder, and then when we break, we go to a break to the down direction with the target of the same amount of pips from the neckline to the tip of the head. Okay, so let's move on. Okay, this is a very good example because it gives you some real-time example. Sometimes the neckline is not a straight line. Okay, sometimes it's just, you know, lean a little bit. It's like this one, and it's not perfect. You know, the patterns is not shaped perfectly, but you should look for it. So here, this is a head and shoulders, and this is an inverted head and shoulders. If you can see, this is inverted. So this is downtrend. Then we couldn't make. So this is should be lower high and lower low. So this is lower low, but we couldn't make a lower high. It's the same high, and then we come again to the neckline. If we break it, then it will go to the opposite direction. This is a very good pattern, and if you see it, most of the time it will achieve the target. I see. I always say most of the time, because you know this is, I repeat every time. This is not an exact science. This is an art. You try to use it for your advantage, but it's not an exact science. Sometimes it works, sometimes it doesn't. So that's why you should always keep your risk management and money management at every strategy you use. So after we saw the head and shoulders pattern, now let's speak about the some other pattern we can see, and it's a reversal pattern also, which we call the double tops, and also it's twin the double bottom, because they are the same. Okay, if it's an uptrend, it will be a double top. If it's a downtrend, it will be a double bottom. So it's the same. Actually, you will see it. It's here. The price is going up, trying to break, but it couldn't. Go down again, draw up, and then here it breaks, and then this indicates that the price will reverse and go in the opposite direction. So this is the opposite. When they have a double bottom, price comes here, couldn't break, try again to break. Whenever you use this, as even if you can't see the shape perfectly, if the price is not breaking some point, it couldn't break it for 2 times or 3 times, this is an indication that the most of the time that the trend might change, because the price cannot break it. So of course it will change the direction because the other force of the market. Now let's move on. So this is a double top and double bottom in real time. So we see it, as you can see here. This is the neckline, and this is the price couldn't. This is downtrend. Okay, this is downtrend. Price couldn't break down here, and then again this area couldn't be broke. So this is a great support for the price. It's very strong. That's why it couldn't break it. So it will go up. If this neckline is broken, it will go up. And this is the opposite. Okay, the price is going up. Here, try to move again to this area, the same area we found the resistance. So it's coming back. The neckline, if it's broke, it will go down. So this was an uptrend. So the double top will be a reversal pattern, and this is the double bottom. If the price is going down, and this happen, this double bottom happen, then the price will reverse and go up. So let's move on. We have something which we call the triple top or the triple bottom. This is a similar reversal pattern, which is just like the double top and double bottom, and instead of 2, you get 3. So there is a strong support or resistance which the price moved toward 3 times, not only 2 times, and then it couldn't break it. This is exactly the same, but it's 3 tops or 3 bottoms. If you have any question, feel free to send me. If you can't see my screen or hear my voice, please send me on the chat. Let's move on. Now we will go to the continuation pattern. So what is a continuation pattern? Continuation patterns is a price pattern that show that there is some interruption of an existing trend. For example, the price of an asset or a share or a currency is just going to consideration after a strong rally. For example, it was going up. So the pools are, trying to take some profit. This is logical. Every one of us will think the same. You always need to think of the market as there is some human being behind this chart. There is someone who is making a profit, or someone is avoiding loss. So if there is some rally to the upside, this profit, the pools will try to get at least to get some profit. So they will sell. They will go to the opposite direction. So the price will now take a break for some time, and then it will continue again. So here is a little tip. The continuation pattern can be identified bullish and bearish signals. So it doesn't matter where you see it. If it's in an uptrend, then the uptrend will continue. If it's a downtrend, then the downtrend will continue. And there is some second pro tip you can say is we will see that you can use this either as a continuation or a reversal pattern. Let's start by the flag pattern, and we will see how we can apply it. Let's identify the flag pattern first. What is a flag pattern? A flag pattern is formed when the price of a stock or a currency rises rapidly in a very short period of time. We call this the flagpole. We will have some pictures and slideshow from the real market. So a flag are categorized as a continuation process. This represents only brief pause in a dynamic market. The market is going very strong in a direction, which is up or down, and then briefly have some pause and then come back to the same direction. There is always a rectangular shaped consolidation pattern will form before continuing in the prior trend. So a flag pattern typically occurs after a strong price move in the direction, and then the pattern is seen as a pause or a rest period where the market takes an interval before resuming its previous direction. So as we mentioned, if the pools are trying to get some profit, it will pause for some time. This is the flag as you see. If you can see my screen, please send me. If you can see now, you should now see examples of the bullish and bearish flag pattern. So here the price is moving sideways, then strongly move. This is a very strong move to the upside. Then there is some consolidation area. You can see this is a rectangle. There is a here resistance and support. So the price cannot break this for some time, and then we break it from this point, this break point. We predict that when the price break this point, it will go as the height of the flagpole. So you now measure the pips or the dollars value from the starting move of this pool to the end, and then when the price break this area, this rectangle, you predict that the price will go. This is the price target of the flag shape pattern. This is the same flag, but it's inverted. It's a bearish flag. So the market went very strong to the downside, then some consolidation for this rectangle, and then we predict that if the price break this support area, the rectangle will go to the same direction again, and we have measure of the flagpole, this area, and the price will go to the same direction with the same amount or move of the same measure or pips or dollars value. So let's see some real-time example. This is the candlestick chart. So you will not see it as lines. You can see it like here in this candlesticks moving strongly to the upside. So you can draw this line, and then there is some consideration. You see there's support here, resistance here, support again. You can draw this downtrend line. Then this also, there's some area, you can see this rectangle, there is retracement. So when the price move in this area, you wait for this retracement to end and this line to be broken, and then you go long from here, you buy from here, and you put your stop loss under this line, and your target should be from this point. Sometimes you can calculate it or make the target starting from this point, not this point. You can be greedy and start from this point. Either way, it's good. Even if you have this target from this point, you should at least lock your profit or put your stop loss at entry point if you get 50% of the move. This is always advised, even with any other shapes or strategies. Always break whenever you have this break point, break even point, and there's 50%, at least close half of your profit, take it, or at least put your entry level, the stop loss at the entry level, or you can do both. This would be better. This is another shape. Now you understand So pull, then consolidation, then break, then the target will be either from this area to this area or from this area to this area. You can be as sure as you can, but at least stop loss would be here, not more, not down than this area. Okay, let's move on. At any time, if you can't see my screen or can't hear my voice, just let me know. So this is inverted flag. You can see another example of it. I think it's very clear now. Let's move on to the other patterns. So after the flag pattern, let's go to the rectangle pattern. This is very common. You will see it a lot in the market. There is, of course, bullish rectangle and bearish rectangle. The rectangle pattern are formed when the price is hitting horizontal support and resistance level. As you can see here, there is a resistance, there is here support. The price is hitting both, hitting the resistance and hitting the support. It couldn't break either of them, so we predict that at some point it will break and will continue in the same direction. This is a trend following shape, or we think that, but you know, sometimes you can use it both ways. This is what I meant when I said you can use it both ways. For example, if you can see it this way, couldn't break it here, but if it could break here, even if it was an uptrend, you know what this would be? This would be a double top. So you can always you have to be very active with the price action. It's now, if it break down here, it's now not a rectangle, it's a double top. For example, here, the price move here. If it's a rectangle, it should be break this point, okay? But let's say it didn't. Let's say it broke here. This would be a double bottom, which is a reversal pattern. So use it always in your advantage. If you have a rectangle, start from the lines, the top and bottom, the support and resistance, and wait for a break. Whenever it break some of the direction, go with the price move. All this is actually trying to predict the price action. So like this one, you see here, the price is moving up. We have an uptrend, okay? Now we have very strong, you see this candle? You see this red candle? At this moment, imagine that you can't see the other candles, okay? At this moment, what did you think the traders would predict the market would do? Most of them will say the uptrend is ended. This is a very, very strong bearish red candle, so the market will go down. But for some time it couldn't, and then it went up again. This is for some time. No one will know at this moment what is the direction, going up or going down. So you shape this rectangle, you draw it in your chart, and you wait. If it broke at this moment, at this area of resistance, then you buy from here and you do put your stop loss here. If it break the support, you sell here and you put your stop loss here. But most of the time, it will follow the trend. Okay, this is always advised to follow the trend. Please feel free to send me if you if there is any issue, if something is not clear, or you can't see my screen. Now we'll talk about the triangle pattern. Okay, looks like everything is working fine. So triangle pattern are commonly used in as a continuation pattern. Okay, so there are 3 variations of triangle pattern, and they are all important to learn because they can help identify the continuation of a bullish or bearish market. You always use the or find the triangles as symmetrical or ascending or descending. We will have some examples right away. So the triangle begins forming with its widest point, and as the market keeps moving sideways, the range of trading narrows, completing the full formation of a triangle at its apex. This chart pattern is often described as a horizontal trading pattern and is like wedges and with bullish or bearish movement can signal a continuation or a reversal. Always can be also in the trend direction. I will see with you right now. Okay, so we said there is 3 types of triangles. Let's start by the ascending triangle. So the ascending triangle typically break out the same direction as the trend was going just period where the triangle formed. You can see the price now was going up, down. It couldn't break and move a higher high. It couldn't even break and make a lower low. So now we are not making a lower high. We are making the same highs, and we are making what you can see here. Yes, it's a higher lows. So the uptrend is moving, but we are not able yet to make higher highs. But we predict when we break this resistance area that the price will move up. Most of the time it will retest. Again, the resistance will become support, and the triangle will give us an indication that the price will move up. And the same with the descending. It's now, if it break down, the same triangle, if it break down, we predict that the price will move. So when you have the triangle shape ascending, you predict that either way. So you wait for a break and then you go with the direction of the break. The descending is the opposite. The price is moving down, making a higher, couldn't make a higher lows or a lower lows. It's the same low, but it making lower highs. You can see lower high, but it couldn't make a lower low. So we predict that the market will now reverse from this point or continue in this point if the price break. So when you have the triangle, you always have to be very active with the market. You have to be waiting for a signal. Either way, it could give you here an uptrend or a downtrend. Most of the time, it will continue with the same direction. And this is the symmetrical triangle. This is the most common. It's actually symmetrical. It's not, it's making higher, it's making lower highs and higher lows. So we can't be sure, but most of the time it will break and go in the same direction, and it can go to the opposite direction. You wait for the break and then you go with the direction of the break. This is if you want to keep this slideshow, you can always have this lecture. It will be on our YouTube channel, also on our website. So this is the triangles. So some shape of the real market, you can see this is ascending triangle. You can see it was going up, couldn't break, and then broke this area, so it went up from this. This is a symmetrical or descending. This is a symmetrical, and the price moves in the direction of the break. So if there is any question, I'll be more than happy to answer it. Please send me now, and I will open the real market to give you some real example. Oh, okay. I was actually having this example before. This was shaped today in the 1 minute chart. What can you see? This is a downtrend. What you can see in this dollar yen move? Yes, exactly. It's a double bottom. Okay. I draw this shape just to let you see it, but it's clear, the price, this is the actual move. It was happening today. This is a 1 minute chart. The price is going down. It couldn't break, move up, try it again. Even this time it couldn't reach the same area, so it broke the rectangle and it moved up. We predict the same move from here to here. It will actually, it moves even more than this one. You can see this shapes everywhere at every currency, and you would see this is the gold. You see here, this is a flag. You can see this is a flag. Okay, it was here where you can say that the flag was broken, and you can move up from this area. This was the move. So how much was this? Okay, it's like $20, I think. So from this break, it's almost the same. You shouldn't be waiting for it by the pip, you know. This is a very good flag, and you could go long with the direction of the trend. This is some examples, and if there is no more questions, I will be now ending this. Okay, please be with us in the upcoming webinar. We will have in the coming Thursday, 6 p.m. Dubai time. It will be the same time. Please register and be with us. You will also have a recording of this session at in our website and also in our YouTube channel. If there is no more question, I will end this session right now. Okay, thank you for your time and goodbye.